not satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to start off by looking at the December gold contract here today, folks. I posted it up. It's a 4-hour chart, going back quite a ways, at least 15 days. As you can see, been waiting to hit to this 382 retracement there at 1725. Well, I woke up this morning and I noticed that there was something unusual happening because I had only one other position on, and that was in the hello, operator. I can't even remember. Well, crude oil. It was the only other position I had was in crude oil, and I noticed there was a big difference in the prices of where I thought they were going to be in equity. And so what I noticed here, as I was showing here, that I had been filled here at 1725 and the market was trading at 1742. I didn't see this on the chart. As you can see here, it's not showing on the chart. So the first thing I did is I called Twentyman and I said, Jim, what's the low in the D's Gold? Because we both have CQG, but he has a premier CQG. I mean, it's not even available to anybody because it's a test run. He tests all kinds of things for Timmy over there in Colorado. So he said, yeah. He said the low is 1719. I said, oh my God. So we had an order setting there in the December gold to buy at 1725. So what he sent me the time and sales, in other words, to prove to me. I mean, I believed it because I could see the fill, but I just want to show you the time and sales here. I'm going to bring this up here. This is directly from the exchange, and I've marked it so you'll be able to see it. Let's just get up here. And maybe you're not interested in this, but this is how this business works. And sometimes you're going to need something like this. And this is one of those times. This is part of the factor that the darn thing's so thin during time. Look at this, folks. Look how quickly we went from 742 with virtually, hardly any trading going on. There was your trade at 1719. That was the low of the day. 1725 was way up in here. Then it went to 19. That was $6 lower. And then, of course, that's all I wanted to see. I wanted to see that 1719 print because that was pretty much, it was really surprising to me. So I know that we should be switching over to the Feb contract. So the next thing that I did is I went over and I pulled up the data, and this is from Ensign with my CQG data feed coming in. And you'll be able to see here as we look at this, you'll see February gold. There it is. You'll be able to see there it was. There was your 382 retracement. Here we went $4 below it. We went $6 below it in the D's, $4 below it. Same thing, very, very fast volume down in here. And now you can see we're trading up about $20 from that level. So I suggested that, we put our stop at break even on that and just see what happens because, that was such a big move so quickly. They had to be cleaning house a lot from that level. Now, what I do on something like this when I have something that surprises me, because frankly, I forgot to cancel that order, folks, because I'm switching over to February, but I didn't put the February order in, mainly because I try to keep in vacation mode this last, especially during Thanksgiving week. I've done that every year since 1976 when I first started working for Drexel, and I've done that all the time. Now, I work all the time through December, but the week of Thanksgiving, I watch that one very close because I have a strong affiliation to Thanksgiving because so many people are out there having a really rough time, even in a place like Tucson that is pretty nice. My goodness, you wouldn't believe the homeless that we have here that's going on here. To take a look at this. So that's what we're paying attention to. Now, speaking of 382s, and also I want to bring you another one up here so we can see it very closely here. You remember yesterday we were looking at the 382 retracement in the crude oil up there at the 82.30 level. The high was 82.36. The number we were looking at was 82.31. And you'll notice here we had the really nice 3 drive to a bottom pattern. The market broke $2 a barrel, then rallied almost up to the 78% level. And, of course, we had our stop at our break-even point, which was right back here. And then the market started to break. So as it started to break, I said, well, I want to clean out positions today because I don't want to have anything on over the holiday, which will be on Friday. And I will be here, but I'm not going to be trading. I'll just be answering in questions and stuff like that. So what I did was I said, well, let's thank the trading gods where we are here, and we're going to put an order in. And so what I did this morning, and you'll be able to see it unfolding here, and I'm going to tell you the principle behind this in just a second. So hold on. Just memories that Mark Douglas just popped up here. Okay, there's what we're looking for. Right there was your 382 retracement. Here's where I sent it out. As you can see, it says cover the short right at the 382 retracement there at 79.75. Folks, it's come all the way down to 77 and change. Now, that's the principle of leaving money on the table. During the 6 years that Mark worked here in Tucson with me here in the office, we had a lot of really big hitters come through here. And the one thing that was prevalent in every single one of them, the fear that they had the most of anything, not missing the market or anything like that, was leaving money on the table. And Mark used to sit down with them and try to explain to them the only reason that you do not leave money on the table is if you get filled on the high tick or the low tick. And he said that's a very rare occurrence. It does happen, but it's more of a chance than anything else. And so don't worry about that. And I don't worry about it. I'm just thankful that, I got a little bit of it, and that's all that makes any difference. So that's why I'm trying to bring these things to your attention, because Mark can't be here, but certainly Paula is still here, and she's still got a lot of this information. And I've got all of Mark's materials. Thank God, he left all the materials that he was working on. He left me a copy of all that stuff. So it's been very, very helpful through the years. And I go through the same things you go through, folks. I make mistakes, and you see them. My goodness, I'm certainly not perfect. But when the long run comes up, we should be able to make a couple of bucks, especially with volatility that we're having like now. Look at this fact. We have 30 handles up, 30 handles down in 2 hours in the S&P. That's 60 handles. That's $3,000. That's a lot of moolah. That's almost like the crude oil and almost like the gold. So we're getting big swings here, and that's what these patterns are for. They'll get us on. They'll keep us to the promised land, for sure. No question about it. We're not going to have really major losses. We're going to have some losses, of course, but by golly, they're not going to be majors. Now, speaking of one yesterday that we were talking about, when we were on the air here, I wanted to get it up here because I wanted to show you one way of handling something like this, and this was in the euro. And what I wanted to do today was short the bonds, but unfortunately, they've had the big move down already. Here is the euro yesterday we were talking about, right there at the 382. We took a quick $100 loss. The market backed off. This is an hourly chart, folks. So it backed off right to the 382 retracement and then had the big run up here today. So let's stay tuned for TFNN paying a few bills, and we'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I'm going to talk about patterns that don't work. I think it's important to realize, I talk about some of these that work, but you also need to know that some of them don't work. If you remember a couple of weeks back, this is a weekly chart of the Goldman Sachs, and as you can see, it was setting right there at the 61% retracement. And we said that looked like a really good sale. Remember, this is a weekly. That trade, we did it at 72, I believe, 472, and we were out of it at 477, and you can see we went considerably above that. Now, that's a perfect setup, folks. It didn't work, and you got to get used to that because this trading is like, you got to take losses or like breathing. You got to take losses or, you're just not looking at the right thing. The only way you can not take a trade is to not trade, and there's no way to make a living. You've got to be able, like Wayne Gretzky always said, you miss 100% of the shots you don't take when you're playing hockey, and it's the same thing. You lose 100% of the trades you don't take. Now, of those trades you will take, you should really usually make about 60%, and then you'll have 2 losses, and then you'll have another 2 or 3 or 4 losses. Break even, what we call break even trades that had a pretty good profit in it, but then you put your stop at break even, and that makes it a whole lot easier. And here, our next one I want to share you is really important because I have so many students and friends over in the UK, and I wanted to bring this chart up because I had been bearish on the British pound, not recently, but the last couple of weeks I was up here at that 61% level. But look at this. We had this beautiful pattern up here, and look, we just kept bouncing around at that 61% retracement until today. And today, boom, we just shot up 250 points on the pound with really bad news coming in on the pound, folks. They're facing terrible strikes over there for railroad strikes, food strikes, train strikes right during the middle of the holidays. And not only that, the government, the smart guys that they are, they're going to tack on some tariffs for people that want to fly out of the country. So all of those things should tell the pound to go down, but the pound doesn't know that. Somebody's standing in front of that and say, well, we know more than they do, and so we're going to buy it. And that's the bottom thing that you want to know, folks. You got really bad news, okay? And look at the market take off. That's all you got to know. Because they can lie to you, cheat from you, give you misinformation, false information, whatever you want to call it. And by golly, the one thing they can't do is they can't hide from you. If prices are going up, there's more buyers. Prices are going up, there are more sellers, and that's what you have to know. And as a pattern recognition swing trader, you cannot stand in front of those, folks. It's just not good sense, either economically or whatever. It's just not very good to do that. It's just, really, it's a losing proposition is the bottom line. So that's the main thing. Now, the other one I wanted to talk to you about is this chart that I brought up yesterday from one of the most expensive of the technical places that we have here in the United States. I'm not going to mention it because my friend Rich Anderson, those of you that subscribe to it will recognize it, but it was a situation with the gentleman that's doing this for them who has a very bearish outlook for crude oil. I'm going to bring this up here and show you. Now, we went through this. We went down to this line. We made the double bottom here, and we rallied $6 a barrel, folks. And from that 382 retracement at 82.31, we've already dropped. We're back down near those lows again. That we go below this line, I don't care what's going to happen with Putin or any of that other stuff, but oil prices are going to go lower. The Saudis won't be able to do anything about it, whether it's lack of demand or oversupply. I don't know what the answer is, but that'll mean that the market's moving in that direction. So don't let these charts scare you. Just remember that there's people behind them buying and selling, and a lot of them have a lot more information than we do. Remember, we're only looking at price and time, and mainly price with ABCD, and looking at these patterns that we have, and they're a good advantage. But boy, they're certainly they're not infallible. The main thing is you don't want to have a situation where you're going to lose 5-6 times in a row, but that will happen. It will happen over a period of a year, or maybe longer than that. But you're going to have 5, 6, 7 losses in a row. But that's going to be followed by a tremendous streak, and you've got to remember that that's why you're looking at that. So that's the main thing that we're going to be paying attention to. Now we've got a market that's coming up that's going to be real interesting because our good friend Trader Tom is going to be looking at that over in the UK, and this is the the German DAX. I want to get this up here for you, and you'll be able to see it here. And you'll see the German DAX right here. We're making an equal move. You can see the move that we made right back here. That is doing the same thing again. You see we make a lower low and a lower high, so we're still in a downtrend. We're setting right at today's day, Mr. Fibonacci day, and there's where we're probably going to be either today or probably tomorrow or Friday, given the fact that they'll be trading 2 days, but we won't be. I'll be here Friday looking at the charts, of course, early in the morning, but nothing after that. We've got some fun things planned to try to help the neighbors and stuff. So anyway, that's what we're watching here. We're going to review this one on Monday for sure, because this has really got everything set up, time and price, everything coming together, equal moves. Those are the types of things that we like to see. Expansion moves up to the top. All of those are, really spot on of what we're trying to look at. Now, my trade of the day today for you folks would have been the Treasury bonds, and I wanted to show you why. And you have to do this yourself, folks, because I'm not going to update it because it's just too much trouble to get it done quickly in time before the break comes up. But I want you to know here that we have not taken out this high of the 382. We're still 15 pips below it, and 15 pips below that is like 1,000 points in the bonds. The Treasury bonds, however, went up above the 127 level. It got to 127.25. Well, that was showing a divergence in the market. In other words, the Treasury notes that should be leading the market were actually lagging the market because it was not making new highs. So that meant that the Treasury bond move is not a valid move to the upside, because this market, Treasury notes, it's huge, folks. 6 times or 7 times what the E-mini S&P is, and it's 3 times what it is, 4 times what it is in the Treasury bonds, because this is where we get our interest rates for credit cards, automobiles, and all the other stuff, commercial buying, your credit card stuff. So anyway, that's why I would be looking to sell the bonds today. They broke in about a little more than a half a point from that level, but that's neither here nor there. So that's what we're watching that time. We should be starting down in the notes and bonds, i.e. interest rates going higher. The Fed was out there today. I don't know if the selling is still continued. Now we're back up to a little bit, 413, and the Dow Jones is still trading substantially above the high of the other day at 39.90. We're 100 points higher than that, so it's hanging in there okay. And what else is going on that's of any interest? The gold's trading at 11.44 after making a low of 11.19. And the euro is still in a bearish mode, folks. And what I would do, we're going to have to come back from the break. I want to talk to you about that because we would like to follow the money here at TFNN, and we're going to talk about the U.S. dollar. And we'll go back to the time when Mr. Tommy O'Brien Sr. said, King Dollar, way back in 2011. We'll be right back, boys and girls.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted the weekly chart of the U.S. dollar index, and as you can see, we have made the 382 retracement. Now, this is going back a long, long time, of course. If you remember, way back when the dollar was trading at about, I think it was right around 72, we had our good friend Tom O'Brien Sr. coin the term King Dollar because he thought that the dollar was going to rally, and boy, oh boy, did it ever. It's been going up ever since. This is our first major 382 retracement in the last couple of years. It stopped exactly on the exact price that we were looking at. And when you're looking at the U.S. dollar index, we know that 53% of it is based in the euro, and then there's another 7% in the dollar, in the British pound, and another 8% in the Japanese yen. But when you add it all up, about 6 of the major cross rates take care of about 80% of it. The other 19 really don't amount to very much as far as calculating what the dollar index is going to do. But what we want to do is we also want to look at this on a daily basis. And the reason why we want to see that is because you'll see how accurate this 382 retracement has been here on this particular trading vehicle. Now, this is the dollar index itself, and as you get up here, you'll be able to see we were looking at the 3 drive to a top pattern up here. You can see the beautiful ABCD. That ABCD seems to work, doesn't it? And then what did we do? We had the beautiful 1-3-5 pattern lining up right in here, and then we've come down. We've stopped at the 382 retracement here now. This is a daily. You can see we rallied for 5 or 6 days, but look, we could not even make a 382 retracement of the last high. And now we're back down a little bit into this area right here. Going below this level, folks, with a shallow rally like this of 1 week, boy, that is really bearish. And believe me, that could be a turning point for the dollar for quite some time. Most of you know who Martin Armstrong is. I happen to be a big fan of Martin Armstrong from his technical ability. He's a very, very smart fellow, and he's got a lot of information to share. I don't agree with all of it. Some of it I do agree with, but one of the things that I heard from someone who subscribes to him is his outlook for the next 3 years in the Dow Jones. Buckle up, boys and girls, because you're not going to believe what he says. 60,000 in the Dow Jones is what he's looking at, a doubling from where we are right here. And what he's saying is that the reason it's going to happen is there's going to be a flight to quality like never seen before, not to bonds. It's going to go to high quality, what we call smokestacks type industries, basically the Dow Jones type, not the tech type. And that's where it's going to go. I don't believe that, but it might happen. And if it certainly starts to move a lot higher, then we're going to have to say, yeah, maybe Martin Armstrong is right. Will that affect my trading? Heck no, because I'm looking at 15-minute charts, 30-minute charts, 20-minute charts, whatever chart I can see that I can see a pattern that would allow me to make a trade, and I don't have to risk very much. That's all I need to know. The rest of it, the fundamentals and stuff, they just get in my way because I hear the fundamentals, and by God, look at the fundamentals in the British pound, folks. It can't get any worse. They got the health situation. The health people are going, the nurses and doctors are going on strikes. The rail strikes are going down. All the trains are going to be shut down. Trucking is going to be shut down. How are they going to deliver the food to the markets? And yet the pound rallies 300 points. Hello, operator. What's wrong with that market? Somebody knows something. It ain't me. But I'm not going to stand in front of it. No, not a chance in the snowballs, whatever. That's for sure. Now, speaking of the same thing here, let's talk about one of our favorite stocks from our very favorite people, and that's Mr. Elon Musk. I respect that guy, not because he named his car Tesla, because everything that guy has ever touched has been good. I mean, he knows what he's doing. You can't fade that dude. Here is a chart, a daily chart of the Tesla. You can see here we have been heading down for quite some time. You can see that we had a beautiful 135 pattern here. We had another 135 pattern right here. We also had a little ABCD right here. We're not very far away from a target, folks. We're only 25 or 30 bucks away. That's down around 134 to 140. So this is just a big correction. This is the first major correction we've had. This was a correction, but this is a major correction. You want to fade Elon Musk? Go ahead. Be my guest. But just keep in mind that there's going to be a lot of dead bodies that people have done that in the past. And we've got a caller from Austin, Texas. Mr. Steve, how are you doing?
I'm Larry. I'm doing great. How are you doing?
Living the dream, baby, on the green side of the grass. This is my favorite 2 days of the year. 3 days, because when Mark was here for those 6 years, we really had a lot of fun cooking for the folks down at the Gospel Mission. We can't do that anymore because it's a big operation. They got about 600 people.
And Larry, you sound great. You sound good. You sound like good. You're feeling better, too.
Yeah, sure am. Yeah.
Anyway, I wanted to ask you about, you showed that chart earlier on the crude oil, and that it has made a one heck of a drop, and it looks like a halfway move to the lower end. Could be, maybe not, but I was wondering what you're thinking on the natural gas as well.
Well,
if you have any from a longer-term picture.
Well, I certainly am. I've been we've had a tremendous move here in natural gas, as most people that follow. And today, even we got all the way up to 8 and change. But if I'll bring this up, you can see the level. We went way above the 61% retracement here today. Now this chart's a few days behind, but it's going to give you a rough idea of how bullish natural gas is, folks. We were up here today. We were up here at $8. And we backed off about $1.50 from that level. So we're having wild action everywhere. And this is possibly a head and shoulders pattern now setting up. I have to do the time counts on this, but I'll do that over the weekend. But anything above $9, we could go back above here. What people don't realize, Steve, is that the old highs that were hit several times were at $17. And we haven't been any higher than 9 or 10. So we got a long way to go. Now, we're not like the rest of the world because we have plenty of natural gas where these people in Europe don't, and so that's where it's a misallocation of where the gas is needed. But this looks bullish to me. Okay.
In a longer-term scheme, do you see it where would you go negative on it if it broke a certain level? What would turn you or thinking of the other side?
Okay, the first thing I would be looking for, and I haven't done this yet today, is to see what the retracement high was today. And I'm sure what I'm going to do here, as soon as we're done, I will bring up the chart, update it, and we'll see exactly where we are. And I can answer that question for you, and I'll show you exactly where I'd be looking for a possible short position, and that'll make it very, very clear. Because I saw when you popped up, natural gas was one of the questions, but I hadn't updated my charts yet. So what I'll do is when the break comes, which will be here in just a few seconds, it's starting now, and stay with us. And in about 4 minutes, I hope to have your answer. It's what we call the best guess scenario.
Okay, that's right.
Hey, happy holidays to you, Steve. I love it down there. Come up and see me if you get a chance.
Will do. Thank you.
Okay. We'll be right back, folks. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, Steve, I've posted the chart of the natural gas here in the room, and you'll be able to see that we just completed an ABCD up there at 81. I had a hunch that's where it was going to be, and you'll notice that from the high down to the low up there is your 61% retracement, and the ABCD measures to 8.10. The high was 8.12. I mean, my goodness, you can't get any closer than that. And you'll notice here we've already sold off quite a bit. That's $1,000 sell-off, and so that's mainly what I'm watching here. Now we got a huge gap in here, you know what I mean? So what it's really an amazing pattern here. It's just got everything that you could possibly be looking. If I had been watching this today, I would have said, get ready to exit your long positions or even take it from the short side there, because look, after hitting that level, it came down. So that's what I'm looking at, Steve. I think to watch the gap down in here, that'll be your first level of support, and we'll see what's happening here, and we'll move on to, I think we had another caller from Spokane, Washington. Bob, how are you doing?
Good. How are you, Larry?
Just living the dream, my friend. What can I help you with?
Yeah, so on the E-mini, I know that you're more of a short-term trader, but I'm looking at the possibility of a ABCD from September, the September low at 35.02 or so, coming into an area of about 41.34. And it looks like a perfect setup, and it looks like also, if that were to happen, that you would have a 3-drive pattern from last March extending through. So
yes, sir.
I don't know. I'm kind of planning for that eventuality.
I think you're absolutely correct. The only thing that would change that, in my opinion, is if you saw a print below 3,900. Then I would say, well, this was the end of it. The fact that the market could not get above the 40.65 that we made a week ago, we came within 30 handles of knocking that out today, and then we backed off. We're trading it, I heard 40.19 or something just a little while ago. But the fact that the Dow Jones was able to rally 400 points above the 61% retracement, you just have to respect that. And the NASDAQ still acting extremely weak. Russell's not doing very much at all. But if we can get above that 40.65, your 41, that number you want, 41 and change, is right in the ballpark of where you want to be with an ABCD. So I think you've got that pretty much figured out, Bob.
Well, thank you. But I don't know whether that's the eventuality or whether that's just wishful thinking. But that's my long-term swing trade. Anyway, coming into the first of the year.
Okay, I'm going to tell you something really important here. Are you listening?
Mm-hmm.
Nobody knows what's going to happen next, pal. Least of all you and me.
True.
So when you see it happening the way you want to, then you can act. If it doesn't happen, you've got to fix your strategies. But I gave up people saying, what's going to happen next? I have no idea. Yeah, I get lucky once in a while because the patterns work. But to know what's going to happen next, I've never known that. I mean, I still don't know.
Right.
And I don't even care about it anymore. Like Mark said, he said, you don't have to know what's going to happen next to make money. And the reason why is you don't know what's going to happen next. So all you got to do is have something that gives you an edge. And that's what ABCD patterns do.
Absolutely. And we thank you so much for all your charts and your information and all the things you do. And I just wanted to wish you and Sarah a happy Thanksgiving.
Well, thank you so much, and I'll get that $20 out to you right after the first of the year, okay? I'm not sure which year, Bob, but it's coming.
Make it 15.
Hey, listen, if you ever get down here, come by and say hello to us.
I will. We'll go to the Guadalajara.
Oh, boy, you know the right words down here, that's for sure.
Yep.
Hey, thanks a lot,
be there
Bob.
Again. All right.
Okay, buddy.
Bye-bye.
See you later. Bye-bye. Okay, folks, we've got natural gas pretty much covered the way I wanted it to be covered. I was hoping to do that over the weekend, but when I saw that move, when Steve brought it up, I was actually shocked because I had the limit minders went off so quickly they were turned off by the time I was looking at the market today. So I missed that along with a couple others that I'm watching. So that's the main thing that we're looking. I want to repeat a quote here by Mark Douglas. It's my favorite one. I keep it right here on my desktop. It says, when you really believe that trading is simply a probability game, concepts like right or wrong or win or lose no longer have any significance. And that's what you have to do, folks, as a trader. Don't worry about what's going to happen next. Don't know whether you're going to worry whether you're going to win or lose. Put the order in, put the stop in, and let the chips fall where they may. I've been doing this show here now for it's been 15 years. And by golly, I've had some up days, I've had some down days, but overall, have a pretty good idea what these markets are going to do. Yeah, I get fooled occasionally, but everybody does. But, you get back on your horse and you ride it again. That's basically all you can do. Look for the things that you do wrong and try to stop doing the things that you're doing wrong. I had an email today from a nice gentleman in Germany. He's paid $200,000 in trading losses over the last 2 years. He's bought every conceivable trading system that he could get his hands on. None of them have worked. And he threw his hands up in the air. He was talking to Paula Douglas. And he said to me, you're my last hope. And I said to him, look, I said, the problems you have, I can't put in typing. I said, if you'll call me, I said, I'll try to help you. I said, but, I can't write it all out because, that takes 2 or 3 books in 2 or 3 years. You don't become a professional trader in 2 or 3 months. It takes a long time, a year minimum, sometimes 3, 4, 5. But if you stick with it, you're going to make it. It's not the rocket science that people try to tell you that is. Yeah, you're against the algorithmic traders, but we already know that they trade off these numbers that we trade off of. So that's the main thing that you've got to realize that when you're doing this, that's it. And I want to spend just a couple of seconds here on Bitcoin because it's in the news about Sam Bankman-Fried. And if you want to understand what's going on, go onto YouTube and type in Patrick Duffy. He's a CEO of the Chicago Mercantile Exchange. He did run the Board of Trade before they merged. He's been doing it forever. He had Bankman-Fried on 2 months ago, and he called him right to his face. He said, "You're an absolute fraud." He said, you're just stealing money from people. And this senator from Washington, the state of Washington, said, you should be ashamed of yourself because you're so jealous because this young man is so incredibly successful. Well, guess where he is? In the line of Mr. Bernie Madoff and Enron. Because Patrick Duffy said, there's no assets behind this. He said, this guy doesn't even know what a buy-sell order is. And so it's really interesting to watch that YouTube because he really pointed out that this was a total scam. My good friend John Jameson has been saying that for well over 2.5 years too. So he was also right on it. But that's a good thing because John thinks that we're going to get down here to clean out all these longs in the Bitcoin and Ethereum and some of these things, and maybe 10,000 in Bitcoin and maybe 4,000 or 5,000 in Ethereum and a couple others. And there might be some great buying opportunities for Santa as he comes around the holidays around the 24th and 25th of December. 877-927-6648. 6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I wanted to mention to you, we've got Thanksgiving. Try to help folks that are out there, especially Thanksgiving. You know, we do have a lot to be thankful for. So do what you can for your neighbors, strangers. In fact, I don't even question anybody that's got a sign that says he's a vet or he needs help. During these 2 days, it doesn't make any difference. I'll try to help them with whatever I can. If they're asking for $2, I give $2. If they ask for 20, I give them 20. If they ask for 50, I give them 50. The most ones ever asked me for was $60, and that was about 7 or 8 years ago. Usually it's only a few dollars, and believe me, they can use it, and if they need it, then best to try to give it to them. So this is the time of the year you want to try to give some giving to some of the things that are, going along here with what we're doing here at TFNN. Oh, yeah, let's go ahead. I'm ready. Oh, William, how are you, my friend? Are you there, William? Oh, no, it's William Chu out of Singapore, one of our good friends from Singapore. Looks like we're not going to be able to reach. I'll reach him on Skype a little later, but Sarah and I met him back in 2014 over in Pasadena, California, and he's become a pretty efficient gold trader.
Hi, Mr. Pesavento.
Hi, William. How are you? Happy holidays to you, my friend.
Yeah, I'm good. Actually, I'm thinking of, I know we have very short times left. I'm thinking of asking gold. Previously, we are still looking at one ABCD move down to probably below 1,006. However, if I look at the hourly chart, right, today we have reached a low of, think, about 1719, and since then we have moved up to a high of about 17. We reverse, if we look at the hourly chart, sure. And now it seems that we are looking at the 382 retracement on the hourly. So do you think that we probably has what you call reverse the down move?
Yes, we reversed the down move so far, but that's a shorter term pattern, William. I'll check with you on Skype over the weekend, okay?
Okay, thank you very much.
Okay, thank you. We'll see you all Monday, folks. Bye-bye.